The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 19th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, no problem. You can always just let your fingers do the walking. You send me an email, steve@tfnn.com. Just inside that subject heading, please put radio show question. Of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 168 points, 24,577 is the print. S&P down 25 points. That's printed at 2683. NASDAQ 100 down 1 and about 0.2%. That'd be 77 points of downside. She's printing 67.56. So all the indices are red across the board. Your spot volatility next up $1.16. That's 7.5%. Gold is back $4.50. Silver is up 1 penny. Light sweet crude is up 17 cents. She's trading out at 68.63. Leading the charge dollar-wise to the upside, you got Amazon up 27 bucks. Granger WW up 13. That's about 4.6% to the upside. Snap-on is up 9 bucks or 6.5%. Google up 7. To the downside, leading the charge, it's Align Technologies. That's 22 bucks, nearly 8.5%. You've got Booking Holdings down 18 bucks or 0.8%. Mercado Libre down 17. That's 5%. Philip Morris getting really the tar kicked out of it. 16% to the downside. That's 16 buckaroonies. 30 million shares so far. So there's some pretty decent volume inside of Philip Morris. Our first question, though, comes from one of our denners, which is, in essence, to take a look at the Treasury bond. This denner is long TBT. TBT is the inverse ETF for the long-term Treasury bond. So we would look at the 30-year out here, and I'm going to do that in a couple of different ways for you. And one of the ways that we're going to take a look at this is just look at its TAS market profile. So I'm not looking at CBT. I'm actually looking at the 30-year Treasury from this because this is, in essence, is the underlying instrument. So as we take a look at this, what we know about the 30-year Treasury right now is it is broken through all of its, it's broken through its 3 TAS market profile time frames that you and I can look at. When I say broken through, I'm referring to the bottom of the box out there. The bottom of the box inside of the 60-minute was at 144 and 5 ticks out here. The 240-minute was 144 and 28 seconds, and 144 even Steven on the daily. So that says, okay, this is a bearish-looking chart. Where would price head to? Well, at this stage here, it's either just making a retracement. Let's go take a look at the possible retracement levels. You have 382. Well, we're well beyond that. 0.618. Looks to me like we're beyond that as well. The next one would be 0.786. So let's see where are T-bonds trading at in relation? So right now at the 0.618 retracement level, the next level to the downside would be 142.21, but the swing point out here is at 143.05. The actual low that we've seen today is 143.12, so it hasn't necessarily tested that area. If price tests that swing point, it could bounce off of it. If it closes inside of 143.05 at that level or below, 142 to 141 becomes your price target out there, either the 0.786 or the moving all the way back to its lows. That's what that chart shows you and I. If we take a look at Stevie's other chart out here for the 30-year Treasury, what we're going to see is that it looks like, well, we have a falling price oscillator. That much we know. The price oscillator itself is at the zero line. And this can be a pausing area. We've kind of been, or not we, but Treasuries actually on the trading session of, let me get my crosshair out here, the trading day of April 6th generated a buy signal, and price stayed above Stevie's red line all the way up until April the 12th. And then, in essence, it's really been below that level. Now, 2 days ago was just a slight piercing of that red line. We use it as a guideline, not necessarily an exact tick out here. So this looks bearish to me. This would say to me, my interpretation here, you're on the right side of the trade in TBT, and it should go test, at least pay attention to the 30-year, it should go test the lows out here from February the 21st out there. What it does then, I don't know. If we look at TBT specifically, and we try to go back to February 21st, let's go do that just to be thorough out here. In the case of TBT, the candle session on the 21st is right here. That's a low of 37.80 to 38.65. That may be all you get. I don't know. But it looks to me like that's where it's headed. Now, the thing is that you can't really use this, the TBT date, necessarily, because you're already trading into it. You've really got to go to that underlying instrument and watch the price reaction there. So best of luck. Looks like you're on the right side of that trade out there. Been long since 36.98. You're at 37.84 right now. Hey, the average true range on this is 60 cents. So you could use some type of a stop that would be less than 60 cents or more than 60 cents from where it's trading right now. You might want to consider just simply pulling up your bootstraps. What I'm referring to there. I was looking at March. Yeah. What was I looking at? No, I was looking at June. I'm looking at June when it comes to the T-bonds out there. So, yeah, we're in the June time frame, so I'm not sure where I was looking at March. So I'm looking at March on the other sheet. Let me take a quick peek here. No, I'm not. I'm looking at June there. So I think we got the right futures contract up there. So low was in February. Well, I don't know what to. Yeah, in February 19th. Yeah, February 19th, the week of February 19th out there. All righty, let's go to the markets out here. Well, actually, we're just about to go to a break, but Dow's off 178, S&P is down 25. Is that it? Somebody asked me the question, because yesterday I said on the show, the earliest sign that we're going to get for a confirmed change in trend would be at about 2 o'clock today. So is that what we are seeing unfold right now? Something to think about. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 169, S&P down 25. And so with regard to yesterday's statement that the soonest that I would be able to determine whether or not there was a change in trend, the soonest was going to be at 2 o'clock today. Now, I said that would be the soonest. That mean that it would be at 2 o'clock today, and it proves that that is not the case, that the soonest wouldn't be until at least later on this evening, probably early in the morning out here. And so at this stage here, we're going to have to try to go answer, is there something that Stevie has overlooked? Right? I like to play that game. I'm sure you like to play that game too. Now, why was it? What was it that I was looking at to say, hey, the soonest would be about 2 o'clock in the afternoon? And the way that I came up with that was I had identified the one pattern that you love to trade. You love to trade this pattern. You've told me that so many times out there. And that is where price moves higher or lower, does with less relative energy or weakness out there, and then follows the Stevie 5-step pattern. This pattern here for the NQ on the 5-hour energy drink chart, that's the 300-minute chart that you're looking at, has formed the most consistent tops and bottom signals since the highs of January. It predicted the high on January 26th. Yeah, predicted it like to the T. You just followed along with the signals, at about 2 o'clock in the afternoon, you would have been short to your eyeballs. It predicted the bottom that formed on February the 9th. It predicted the next top that took place here at about 9 o'clock in the morning on March the 13th. It predicted the bottom, the pattern, okay? It predicted the bottom that took place out here on April the 4th. Now, all I was waiting for was that same predictive pattern to unfold. It still could unfold. If it unfolds, we're going to see one heck of a bounce in price out here. Let's say one heck of a bounce. We're just talking about the bounce from, in essence, where we're at now to take out the highs of earlier this morning or last night. I think it was 11 o'clock last night, something like about 11 or so. And I don't know. But the question is, all right, this pattern has called each of those tops and bottoms really well out here. Maybe it's not going to call the next one. So what is it that Stevie overlooked if that was the case? Well, you know what I'd like to do, because, you've taught me that, hey, pay attention to the market, singing in the key of G out there. Pay attention to that. Well, if we just simply go to the lows out here where Stevie's favorite pattern formed, when we start doing the wave count, you'll see we really just got to wave number 5. So I kind of said, nah, that's not it. But every now and then, you have to kind of do wave counts a couple of different ways out here. And if I actually start my wave counts from right here to about 5:15, this is the trading day of, I'm trying to get it. No, it says it didn't do it. This is the trading day of April the 6th out here. And we do our wave counts. Well, voila. There you go. The actual high that we've seen so far in the NQ is wave number 7. Now, all that means is that is where you should at least see a pullback or retracement. So that is in line with what I've seen on some shorter-term time frame charts out here. So that says to both you and I, well, is that the next top? It's one of the patterns that you love to trade out there. So how do we try to go figure that out? Well, we have to go take a look and see what kind of price damage is done. Is this just your garden variety retracement? Are we just setting up a Gartley buy pattern out here? Well, we can try to answer that. Where are we at with regard to market breadth? Well, if I take a look at, let's both go take a look at it, or all of us take a look at it. The market breadth here for the NASDAQ 100, this is the daily time frame. Daily time frame right now is sort of the trumpeter, and it still is bullish. So at 122 in the afternoon, the pattern here is bullish, meaning that there are more issues traded above the top of the daily box than below the bottom. Now, it's not as wide of a market breadth as we had yesterday at this time, but you've got 35% of the issues trading above, 26% below. Still bullish. It is the only time frame of the 4 that you and I track inside of the NDX 100 out here, because if we go take a look at the 1-hour chart, we're going to see that is bearish. That turned bearish here at about 7 o'clock this morning. If we take a look at the 4-hour chart, that is bearish. If we take a look at the weekly chart, that still remains bearish out here. So it's just the daily. But the daily says, okay, there's strong enough market breadth where is there any other pattern that is forming inside of the NASDAQ, such as a Gartley buy pattern? Well, if we go take a look at, can I do it? Yeah. Oh, let me switch charts. Let me switch workspaces here where I can go get a different set of tools. And we take a look at the 30-minute time frame chart out here. I believe what we're going to see is I don't see an A to B equals CD pattern. And that's what you need for a Gartley. We happen to be in wave number 6. Potentially 7. Now, that just started during this 30-minute session, so that's going to be 1:30 to, well, I'm sorry, that was from 1 to 1:30, because it's 1:23 right now. I'm really good with a watch. You'd be amazed. So maybe we see that 7th wave between 3 and 3:30, maybe 3:30 and 4, but you need to confirm. But there is no other pattern that Stevie sees out here. The only pattern that I see on a short-term chart is bearish. Now, what do I mean by that? Well, it's the same set of rules that you and I like to use. We're just using it on the 30-minute time frame. Its price oscillator about 7:30 this morning was getting down towards 0. What that tells us is that price and Stevie's red line are going to catch up to each other. Well, that catching up to each other, that occurred at 10:30 this morning. And what this did was this simply bounced off of that, used it like a springboard, but the springboard was to the downside out here. So that was your bearish test that said, okay, I'm going to continue to go lower out here. So I don't have anything here that, first, there's no Gartley buy pattern. That's not going to form inside of the NQ. We could get to a 7th wave. That could be it. We saw the 7th wave on the 300-minute chart out there. That seemed to work pretty good. But I don't have any patterns. What you and I can fall back on is simply that the market breadth on the daily time frame chart for the NDX 100, basically that's what we're looking at, it is still bullish. There are no profiles either for you and I. Well, I take that back. If we take a look at the NQ's profiles out here, we're below the oh, that was the 5-hour chart. Well, we're below the 5-hour chart. I was going to put here, we're below the 30, I believe. Yeah, we're below the 30. A brand new profile just formed. And that's at the price point of 67.63. But we are below the 120. We are below the 240. And we're below the daily. So that says price could easily fall back to about the 65.91 level. That's the top of its weekly box out there. But I'm not sure how reliable that TAS market profile is. So that's on the NQ. So what's Stevie saying? What Stevie's saying is there's still possible. This is just a normal retracement. I mean, in essence, that's the only thing that you and I can see out here is this just your garden variety retracement? Is there such a thing out here? Well, if we go take a look at retracements here and we look at the 2-hour chart, those retracements, let's go see what kind of level we're at here. We've got just a few seconds to be able to do this. Well, you know, we're not even at the 0.382 level. That would be 66.52. So the simple point is, yeah, this may be nothing more than just your basic retracement that is going on inside the marketplace. That's my call as of 1:26 in the afternoon. No major top or no next top. Not just yet. Not so fast. Steve Rhodes with TFNN. Great.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 178, S&P down 26 points right now. And to kind of keep this thing in perspective is the mere fact that the average true range over the last 10 days for the Dow was 390 points, and we're down 177. So that's our new normal out here, is that we haven't even done just what it would normally do on a daily basis, the average over the last 10 days out here. With regard to the S&P, it's down 26 points. Its average true range is 39. The NDX 100, it's down 80 points. Its average true range is 129 out here. And we can go take a look at volumes and things of that sort as well. But let's go out to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today?
Great, Steve. A different situation. I just heard a good rumor that Amazon might buy out U.S. Auto Parts. It's PRTS.
Okay.
And I was thinking, well, if they did that, you know, AutoZone, AZO, or O'Reilly, ORLY would be a good put play. And I just wondered, looking at the chart of AutoZone or ORLY, which one would look best?
Which one would you like to look at?
About 60 days.
Sure. Which one would you like to look at, AutoZone or O'Reilly?
ORLY, I think, could be.
ORLY, okay. So let's go take a look at O'Reilly Automotive, ORLY. Let's get a feel for what it's doing, how it's trading. And if we take a look at O'Reilly, let me see here. Give me a second just to try to kind of load a couple of things up if I can for you, just so we can do a good evaluation of the equity out here. It does look to me like this wants lower price. Now, let me pull over this chart first to take a look at it. And that is O'Reilly Automotive on the chart that we're looking at, made a top similar to the S&P 500, only this top was made on January 25th. That's the actual high. And if whether we do, excuse me, an A to B equals CD to the downside, and we're going to go look at the weekly chart. But here's what I can share with you thus far, that this is a falling price oscillator below zero. It did the typical test back here on February 27th, so it's not surprising that this has continued to pull back. Today's move, taking out the low of April 13th, recycles our count, so we're no longer at a seventh wave move. We're at something different than that. That's something different, I would say. Give me a second here to double up on these counts. Takes us into the, takes us into wave number 6, potentially. There is a big breakout session that I see, a big candle that's on the day of October 26th. Now, I don't have any volume or any metrics or anything like this, but it looks like, to me, that's where it is headed to. I'm just going to change this here, Ron, just to a weekly time frame. Let me just see if there's anything out here that pops up. And the weekly time frame takes me to the week of December 1st as being a potential level of support out here. So let me go back to the other area. Now, that date of, by the way, the low from December 1st is only down about the 214 level out here. Let's try to study it from a daily perspective first, and take a look at that wide-ranging bar and see what kind of breakout there was here. So this is clearly, or appears to be clearly, where this equity is headed to, and that is the trading day of October 26. And it could be the high, 215.82. Could be the low, 190. So that's what I would use if I were you as a price target for O'Reilly Automotive, if you're going to go ahead and take that type of a trade.
Okay. I appreciate that. Thank you much.
Let me see the weekly. See if there's anything that pops out to you and I on the weekly. And here's the deal with the weekly now. So the weekly might say sit tight. The week of July 3rd, 2017 is a big volume day. It's not the actual swing point, but the top of that session at 220.89 is something you'd really like to see price trade into. And right now it hasn't gotten down there. But it's very possible that all price is going to do is just test that level out here. There were 6 million shares on a weekly basis for November 27th, 2017. And you're only at 3 million shares. So you're coming into this little sign of strength area with some lighter volume out here. So, you know, is the weekly the one that's telling us the story, Ron, or is it the daily that's telling us the story? And I know you'd like me to be able to answer that question for you.
Yeah.
It's just that.
I think I'm gonna wait and see if there's a little bounce, and maybe if it can bounce back into that maybe a buy put on that.
I like that better because what we like to see, you know, and when I pose that question to you, I'm really posing it to myself, is you'd like to see the weekly chart you'd like to see the weekly chart not get in the way of what we just looked at on a daily basis. And, you know, I'd like to see confirming signals out here. And I just don't see it in O'Reilly. But maybe, let's say, what was the other one? Advanced Auto Parts?
AZO.
AutoZone. Okay, AutoZone.
AutoZone.
Yeah, so just for the heck of it, what is AutoZone doing? So AutoZone is also moving into a little bit of a sign of strength from October 26, and that's the range from 560.82 to 596, and you're at 597 right now. And the volume there was 1.4 million shares. You only had 169,000 shares. You know, so I like the idea of sitting tight, because even the chart of AutoZone says that's what you should do at this stage of the game. Doesn't mean it's not going to head lower, but you're just pulling back with light volume at this stage.
And the little one PRTS is only a $2 deal. I don't know. It may not be a bad speculation.
What's the ticker symbol?
It's not U.S. Auto Parts. That's the one that I'm hearing AutoZone. Amazon's going to buy out. PRTS.
Yeah. So PRTS, let's just to see what its stock chart really looks like out here. PRTS. I'm just looking at my other charting package to see if that formed any kind of a bottom out here of any significance. There's nothing that I see on it at this stage. You know, what you'd like to see is you'd like to see some type of clear bottoming signal, and I don't really have that from a pattern standpoint out here.
Okay.
I would say I would feel better saying take a long position if this thing closed above $2.20. If it gets above 220, then you could see 264. Buyout or no buyout, you know, that would be what I would share with you. And, you know,
that way you don't tie up your money. It's breaking out. Okay.
Yeah. But at this stage, it's really just kind of bounced into resistance at the 220 level. Didn't actually hit that today. So far, the high today, I believe, is 219. That's close enough for me. 1 penny away from resistance.
Appreciate your time. Appreciate it. Thank you.
You bet. Thanks for calling. That was Ron in Denver. We just took a look at a couple of different stocks out there. Watch that amazing XLF, says P. If we take a look at, is that what you meant? Watch that Amazon or XLF? Maybe I misinterpreted it. In any event, yeah, watch that amazing XLF. The amazing XLF? The amazing XLF? Yes, yes. Well, let's go take a look at the amazing XLF. It is the only green sector that we have out here. And what is it doing? You know, the XLF is not going to get my skirt in a tizzy until it can close above that swing point from, what was it, February the 9th out here, 27.89. It's basically been trading inside that swing point ever since the day of March 22nd. And I don't know what to make out of that. Do you? I don't know what to make out of it. If it can close above 27.89, we'll know that it has at least likely rejected that February 9th swing point. At this stage, just trading kind of sideways-ish. Right.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go out to Philly and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Steve, well, I'm very good. I compliment you on your skill on the stock indices the past couple of weeks. Thank you for doing what you do.
Thank you. Thank you. My pleasure as always. Thanks for all you do. Now, I know you're calling about oil, and I don't get access to the I haven't paid for the signal for the Brent crude contract. But nonetheless, we can still, talk about it, and I'll give you my take probably from taking a look at the West Texas Intermediary. But so tell me what it is that you're looking at, what you're thinking as your thoughts, and how I might be able to help you.
Yes, you're focusing with your charts on the weekly continuous WTI crude contract. That would suffice.
Okay.
Here's what I'm thinking. First, I'm flat, and I am looking for the potential short setups, or not short.
Great.
So I'm looking for short trades myself. Here's why. 3 or 4 reasons. One, I'm reminded of the cycle work that was shared with all of us by Bill Meridian. And his work shows a cyclical top in the second half of April timeframe. So that's number one. Number two is the price itself and where it's gotten to. Think of it this way, Steve, and I share this with your listeners. Since the 2016 bottom in oil, let me talk Brent numbers. Real easy. From the bottom of January of that year at 27, there was a rally for 9 months up to 58. So 58 less 27 is $31.
Sure.
The mid 2017 pullback bottom in Brent was 44. Well, another $31 higher off of 44, of course, is 75. That's the high today, within 25 cents. So we've got on the weekly chart a clean AB equals CD target having just been met. Now, of course, that doesn't guarantee a top or anything,
but it's certainly a candidate, therefore. And I'm also looking at the DeMark sequential system, which gave a sequential sell back in January, and we've gone to slightly higher highs. But all those things together, I'm looking for 75 to be a candidate anyway for turning point top. Wanted to see what your work showed, if it conflicted with those ideas or confirmed it, please.
So what I can share with you with regard to light sweet crude, and I put it in this morning's newsletter for subscribers, that we're looking for a short in light sweet crude. So and there's really a couple of different reasons. This is the weekly chart for light sweet crude, and off of the low out here. Just going back to a low, and I take a look at the continuous contract. I'm going back to the week of June 23rd, 2017. We happen to be in week number 7, wave number 7, of that potential move. We can also see the price is moving higher, doing with less relative energy. Do we have a signal yet? We do not have a signal. What would be a signal? Well, a signal would be next week, most likely, or some type of poor close this week to generate some type of bearish reversal signal, and then it move back below 65.76. That's what I'm looking at on a weekly chart. If I go take a look at a daily time frame chart out here, I think I put one together. Here's the daily time frame chart, and we take a look at its signal from the daily coming back to the lows of February 9th, and we start doing that wave count. Well, we can get to wave number 7, which is what we are in right now. So the weekly and the daily each have those 7th wave moves. On the daily chart, there is really a butterfly setup that may be forming out here. If I draw that in, it looks, let me see if this will let me draw it in out here. So here comes the old butterfly pattern. And that butterfly pattern would take us, you get to the question is, are we here now in that today's high was in essence the 1.272 butterfly? It's possible. If it is, we're going to see a close below 66.82. Not necessarily today, but a close below it. Otherwise, price could easily go up and make the 1.618 expansion on this butterfly. And that number is right around 72, I believe. Let me just pull this up a bit. Yeah, so 1.618 gets us right around $72 or so. So I see, maybe for different reasons, but, unless it's just coincidental, I, too, am looking for a potential top in oil to be able to share. So now maybe you had seen those 7th wave moves. I don't know. Maybe you'd also seen the butterfly pattern as well.
Steve, thanks very much. That all dovetails very nicely. I appreciate that. Very thorough. I'm going to sign off, thanks for your help, with one parting request, and that is if time permits either today or tomorrow, you might do your analytical process on the ETF known as XOP. That's oil stocks. And it's a well-diversified, equally weighted index. And I'd be curious if your work is giving a message that is somewhat similar. So thanks again. Okay. Appreciate it.
Yeah, no problem. So I'll do that while you are sitting back drinking a nice beverage of water with lemon. That was John in Philly. So let's go take a look at the XOP. Let's go take a look at that ETF, see if there's any signals that we can get out here. And the first signal that you and I would look for is just try to understand what is it doing in relationship to its previous swing point. The previous swing point being January 24th. That had 18 million shares. Today, we're doing 18 million shares. So price is moving into that swing point, or at least we believe it is. Let's go ahead and draw a line across the bottom of that swing point out here. And let's take a look at yesterday's volume. Yesterday was 33 million shares. So when you push into a swing point, even if you reject it, which is exactly what it did, what it does is it sets up the probability. So it rejected on price but did not reject it on volume. Would say I'm going to be back up there to test that level again. Well, today you've got the same thing. We're not done with trading, 18.6 million shares going against 18.1 million shares. So this says that tomorrow the XOP ought to be back because it's rejected price so far. Now, if it closes above 39.42 today, always a possibility. If it closes above 39.42, then it's like a real confirmation that I'm going to go test 40.20. Might bust it out. We don't know. But at least this says on the XOP that price wants to get back up there. Is there an A to B equals CD pattern? Well, there is. We can draw that in, and we would use down here this nice little hammer candle from February 9th. I would use the high from March 23rd, and then I'd use the retracement to pull back into April 2nd. So at the 1 to 1.272. What happens if price breaks above 40.20, the top of that swing point? Well, then your price projection become 41.06 and 42.88. That would set up the old butterfly pattern, or could set up the butterfly sell pattern inside of XOP on a daily basis. Well, it's almost the end of the week. Are we pushing into that swing area with volume? That was 71 million shares. You're at 89 million shares. Really suggests to you and I that the highs from the week of January 22nd, that's 40.20, are very likely to at least be tested. And that is on the Spider S&P Oil and Gas Exploration and Production ETF. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's off 121. S&P is down about 20 points. NASDAQ 100 off 60. So in the next couple of minutes out here, you know, can we... Where are we at? Where are we at in the indices? We've had a nice little retracement. It's really just been little. It may have seemed something more than little. Thus far, it's only little, just simply because of the average true range that we have seen over the last 10 trading sessions, whether it's for the Dow, the NASDAQ 100, the S&P. Again, the Dow, as a reminder, was 391 points. We were down a couple hundred points, not even a couple hundred, so not even half of what the normal average is out there. As we took a look at that, what we were doing, we looked at the NDX 100 market breadth on a daily basis. We said, you know, market breadth can sustain just a normal retracement. At this stage, we had to call it just a normal retracement. Less than normal, right? Not even 1 day's average true range. Now what we do is we take a look at the S&P 500. It's only the daily time frame that has the bullish crossover, but nonetheless, that's an important time frame out here. 166 issues trading above the top of the box, 133 below. If we didn't have the bullish market breadth on a daily basis for the S&P and the NDX 100, then I'd say, okay, maybe at 2 o'clock the signal was to tell you, you know what, I was looking for one pattern, but there's another pattern that formed, and now we have these confirmations out here. We do not have confirmations at a top. More likely, what would take place is that we will see the market find some type of bottom. I don't know if it's here, if it was a half an hour ago, if it's going to be at 8 o'clock tonight, but that we will see the market find another bottom. The NQ specifically will go on to make a higher high on its shorter term chart, meaning the high above last night that it formed out there. And then we can start doing the evaluation with regard to whether or not we're going to see another decent, really decent size change in trend out there. Don't have the signals to say that. If I look at market breadth for the New York Stock Exchange and the Dow, they're both above zero with regard to their advanced decline oscillators out there. So that's both for the Dow, that's New York Stock Exchange, positive market breadth in the NDX 100, positive market breadth in the S&P 500. All that stuff tells me this is just your garden variety retracement. Thanks for being here. Stay tuned. Your favorite polar bear, David White's up next. Tom O'Brien, 3 to 5. Andy Heck from 5 to 6. I'll be back with you tomorrow at 1 o'clock. Take care.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar taking the ABCD pattern to the next level, visit the front page of TFNN.com now.